Okay, today we're going to look at our strategy and understand everything we are trading and why we should follow our systems and make money in the trading. So today I'm going to look at our simple buying and selling strategy in the market, and also to understand when market is actually reversed and what we're going to do. We're going to use S&P 500 as our reference, after which we'll go back and also look at crude oil and see how the system works. If you look at the screen, you will discover we have two indicators: the parabolic star of higher time value and the parabolic star of a lower time value. So the higher time value is our secondary trend, and the lower time value is our primary trend. If you look at the the bigger trend, it keeps markets for some days, but why the primary one fluctuates. We're going to take an advantage and information provided on this for us to take a decision in the market. The first thing we're going to do is to understand the decision points in the market. For the parabolic stars, we know that parabolic stars, whenever they interact with price, is either they generate a buy signal or they generate a sell signal. That's their functions. So when they generate a buy signal, price is supposed to be above it and then to be acting as a trading stop loss. If it generates a sell signal, price will be below it, and also we have a trading stop loss. This is a function. But for us to understand this, then we must understand where the market starts, because otherwise it will look cumbersome and worrisome. So after a series of studies, we're able to discover what works in the market and how we can take an advantage of the system to make money in the market. Because if you look at this, you see that, for instance, here the sell signal failed, and as buy market was going again, make it fails. But there are things that we can do that will help us to filter these noises in the market, and then we make money. Now, if we look at this system, we're going to define some certain rules and parameters that will help us to take a decision in the market. And those things are what we call the types of bullish trend lines that will help us. So we're going to start with the primary bullish trend line. Now, how do we define this primary bullish trend line? The primary bullish trend line is simply when PISA generates a buy signal, then the market is supposed to be in a primary trend. Look at here. You see here that this PISA generated a buy signal. So if this trend continue going up, we will have a trend line. So when the market produces buy signal, then what happens is that the PISA will act as a trailing stop loss. So we have the buy candle. Then if continue moving up, now let's look at where it works. Then we'll come back to where it does not work, so we can take a decision there. Now look at here. You see at this point, PISA generated a buy signal. So this is your buy candle. Then this buy candle here has a primary function, because this PISA generation candle has to validate our basic tenet of buy signal. Because for us to buy, there must be a bullish engulfing, which this buy PISA is confirming. Then if you look at here again, you see that this bearish candle here with this piercing pattern is fully confirmed by bullish engulfed. Then this confirms it. So this candle here confirming this bearish or sell candle here up to this point, up to this high, has given us an engulfing pattern. So here is the high of this sell candle. So this is an engulfing. So this candle is an engulfing, also confirmed with buy generator. So this market is in a buy state. And being in a buy state, so this is now bullish engulfing confirmation candle. And our rule for bullish engulfing confirmation candle is that this buy will be strong if this bull confirmation candle closes above the close of bullish candle and also closes above the high of the bullish engulfing candle. So it meets the criteria that market is bullish, and we see what happened. Market start going up. So when this market start going up, then the PISA is now acting as a trading stop loss. So we get a good buy signal here. So how do we get our buy trend line? The bullish trend line is when the market now falls back to interact with this PISA. What happens? So this is a sell signal, but do we sell here? The answer will be we have to confirm events that will give us sell, because market may hit this PISA here, which will take a decision and form a continuation signal, which this is what it did. Now, if you look at here, we see that when price hit this PISA, for us to know whether we're going to sell this market, there are many things that will happen here. One, we have to now take our trend line and form what we call the bullish trend line. What is the bullish trend line? Bullish trend line is taking a trend line from this parabolic star trading stop loss origin to the point of the last PISA, because this candle now, the break PISA, breaks the last PISA, they're leaving us this particular one. So we spoiled this point. So connecting this trend line with the last PISA give us what we call the bullish trend line. So this one again happened. So if you waited for this market to complete its process, the low of the sell candle also another bullish trend line. So that means that for market to sell, if you look at this structure here, for market to sell, you see that the price need to crack these two trend line supports, and you see what happens. Then market could not close below the low of this, generated another pin bar with this bullish candle closing above the sell candle. So do you see now that the sell candle, which is the candle that no is the engulfing of it, then gives you bullish engulfing of the sell candle, which is a bullish continuation signal. Then what happens again? So then this candle now is bullish engulfing that closes above the high of the sell candle. So we needed a confirmation candle with a PISA. Now you see that now this is PISA, this is a confirmation candle, and also the buy can generate by PISA again. Also confirming the bullish engulfing candle, closing above the high and close of the bullish candle, confirming. So this market is in a bull state. So the violation of this candle may weaken the signal, so continue and buy. So now where do we get sell? Now here again, it's a similar thing happens again here. That at this point, now market may form a bullish continuation signal here, because this is a sell candle again. If you like, also you can repeat the process, but if you don't repeat the process, if you like, you repeat the process here from here again to the last piece outstanding, also to the low of the sell candle. So you see again that if this market will go up again, that this bullish continuation that will go up again, market will sustain above this and generate this. But see what happened? The market begin to close below this trend. So this is a weakness of trend. So based on this weakness of trend, so it's a sign that market is weakening and are going to be correction. So what happens again? Taking note of our original bullish trend line. So we sell when price closes below this trend line. And by closing below this trend line, we expected a PISA to generate sell signal. So when market was closing below trend line, see when our sell signal was generated. So this is our sell candle. So this PISA that closed below this candle is our sell candle. So in as much as market could not engulf it and then keep moving around it, then we know that we're in the same mode. So what happens in this case? So we're going to sell this market to the highest PISA now, which is this one, as our target. So you see that market here hit our target. Now, when these things happen, Now, again, we discover that this trend line here is another support and it's more markets. So if market should close below here, that's when we're going to sell. As market reaches, I say market was weakening again and also sell continues. So this is how we generate our bullish trend line. So we call this one the bullish trend line. Then what of the second one, which is also is a bullish trend line? Now there's two types of bullish trend line here. We have our normal bullish trend line or non-validated, and the second one, the validated bullish trend line. This validated bullish trend line, in most cases, is a trend line that will push market to correction when it is being broken. Why do we call it a validated bullish trend line? The essence of being validated bullish trend line is that when the sellers fails to take the market down and market generates a bullish continuation signal, so we have another trend line being supported, validated by visa support. So connecting these 2 points here give us a validated bullish trend line. So which means that this market at this point will continue to be in a bull state until market breaks this trend line. And when market breaks this validated trend line, the target it will be to knock the PSA or to hit to the PSA target. And then if we look at this market, you discover that once this thing happens, as we said, then we generated ourselves. Now let's go back to look at this one for us to understand the same thing again. Now, if we look at this, you discover that we expected bull market to develop here. Now, this is where our trend line is supposed to start. But what happens here? So if for this market to continue, it fails and close below this buy signal here, which tells us that there's a bearish continuation. And what happened is that it generated a sell signal here. So you see that if we initiated our sell here again, because this one has been violated, then we still make money down the line. But let's go back to recap for us to see how we understand this bullish trend line and the role of the second pizza in determining it. It may be complex, but continuous practicing will help us to understand this. Now let's look at this one again. We are still talking of when the market. Now let's remove this. Now, let's go back again. We have a buy signal here. Now, if you look at when we have this buy signal that went up very strong, we discover that the bigger pizza, secondary pizza, this pizza 0.005, have generated a buy signal here. Are you seeing it? Yeah, generated a buy signal here. Then here is acting as a trading stop loss. So once this thing had generated a buy signal, now look at what happened here. You see that when it generated a buy signal, then markets corrected, and then because when it generated buy signal, this is already acting as a trading stop loss. So market corrected back and then hit this. So once it hit it, what happened? Was able to validate this resistance. So if we look at where this one is confirming, there's a high it is confirming. Let's look for that high. So this is the high it is confirming, which is called the PISA resistance origin. So if you take a trend line, connect it from where it's confirming to this high here that is being validated. So call here also the bearish neckline. So markets will go into a bullish state when they close above this bearish neckline. And this is what it did here now. So having done this, what happened? So we can say at this point that we have gotten a bullish trend line and we're in a bull state. At this point, what happened? This trend line is acting as our trend line. So we can get a trend line at this point. So the trend line has got at this point and is our primary trend line, which we can use to trade the market. But before you connect this trend line, you need a second point. So where will the second point occur? That's what we're trying to say. So second point will occur when this market pull back to hit your trading stop loss. But at that point, we'll reverse the market, we'll sell. So that's what we are saying before. That for us to sell, then we have to establish a trend line, which are one, connecting the last pizza after this. The last pizza was broken. So here we have our bullish trend line. So if you have initiated selling, market retraces backward, and also violating about the second hotel that sellers are not having much power to, and the bulls are still strong. So when this happens again, and this market is violated, that means bulls are in state. So if you have loss here, you can quickly exit your loss and reverse your trade because there's already bullish engulfing of this and price closing above the trend line, so you can resume uptrend. And when this happens again, then you look at it critically and say, okay, there's an engulfing of this because this market may pull back and continue coming downward. Now, if this engulfing will work, price need to generate buy signal by hitting this at 0.05, which what is did here. By doing this, that means that this support, the low of the set trend line, has been confirmed that it's a true support by generating another trailing stop loss. So this will give us what we call validated now bullish trend line. So market can interact with this primary trend line and continue, but once it breaks validated trend line, that means that market can go again to break this our strong trading stop loss. So let's see what happens. So if we have a small loss here and we reverse our trade, market now will reward us massively and will cover our loss, and here's the trade stop loss. So start going again. The question is that if this market generates another sell signal, can we sell? That's the question. Can we sell, or do we say, okay, we are holding this trend line until market breaks it, we sell? So if your decision is that you are holding this trend line until market breaks, so you can ignore this, you're looking for candle that close below this as your sell candle. Then if you look at it here, you see that eventually market was interacting, and this is your sell candle. But the sell candle is supposed to, break this. The market rated against the trend line. Now this is your sell candle. So here you can take a decision to sell because one, price is closing below the trend line. So what will be your next target? Your next target is for price to target the validated bullish trend line. So you stay towards that. You see that eventually markets sell towards that, and also this piece are also generating that sell signal. So this one now is what we call the neckline. But before we move into the neckline, let's keep saying it until we master this bullish trend line and the validated bullish trend line. So if you look at this again, the same thing occurs here again. The PSI here has generated buy signal again. So we're in a buy mode, but can we generate trend line here? The answer is we'll be holding it until price hits our trading stop loss. So at this point now, what happens? So if you're holding your buy, when price hit this trading stop loss here, so this is the last one, this one that was broken. So you get your primary trend line. So you will sell when price closes this. Now see what happens again. Then this price again, this second candle, because this second candle that not this piece to create it as a resistance level, then went down strongly, then went up again and did what again, and then hit that trading stop and close above it. So the next one here then generated a buy signal. So confirming here as the low, this is the low of the sell candle and also was validated. So we have also another bullish trend line validated. So you see in this point now, so if you look at this candle now as your sell candle, the rule for us to sell is that there must be bullish engulfing of the sell candle and also confirmation. Now, if you look at this, see that this is a high of the sell candle. That's why the sell candle turns bullish. Then this one that's supposed to be bullish engulfing failed. Then the next one that formed bullish engulfing is X. This is the candle. So if this we have gotten the bullish engulfing, please note that bullish engulfing is our fundamental to take any buy decision. Then expecting the peace out to confirm it. Now look at what happens here now. So you see that eventually here there is bullish engulfing here. So we expected the next candle to be confirmation candle, and this confirmation candle is actually supposed to be what? A candle that will knock the pizza. Now, by looking at this, you discover there's no pizza to be knocked at this point to be like a confirmation of buy candle. So we expected that market may weaken, and that's exactly what market did. Market then the confirmation, bullish confirmation candle are now engulf the the bullish candle, giving you a sell signal, and also closing below your primary trend line. So this is already a sell signal. So you can initiate your sell here. So what is your target? Your target is the bullish validation signal. So once bullish validation signal is your first target, also was broken strong again. The next target will be the piece at 0.05 and market down so gives you your target. So this is your sell. So your target has hit. So the question here now, will you continue your sell? You can hold your sell, then the sell will be validated if price should close above this strong sell candle to form bullish engulfing of this. Then also, if you don't want to close, you can use the PSA here as a trading stop loss. So the PSA here as a trading stop loss, then you can go out of sell at this particular point. So this is your exit. Now, when you exit at this point, then the question is that at what point now can you buy this market? The to buy will be reflected if price should close above the high of this candle. It is at this point. So if you look at here, you see that price closing above this high of this candle generated bullish engulfing. Then this is a confirmation candle. We'll say come to the weakness of this, but let's be practicing this one when we buy and hold and buy. Then this is our exit. Then before we discuss our neckline, let's look at another example. Okay, again, let's look at this. Now let's assume okay that this generated a buy signal. So if this has generated a buy signal also, what happened? Then this is our trading stop loss. They see that this trading stop loss was hit. So this is not a good buy signal for us. And you see what market was doing. Market was ranging. Then now based on the market was ranging, and then the buy signal has been validated by it. So you can get also bearish neckline. So that means that if this market that is ranging will go into a bull state, so that means that market needs to close above this bearish neckline and see what it is. So here again, market is telling us that bulls are willing to go into the market. But how are we going to confirm that bulls are actually serious at this point? So the only way we can confirm that bulls are actually serious at this point is also understanding our buy trigger, which is 20 moving average. So 20 moving average crossing this neckline, the bearish neckline, now we'll confirm that bulls are willing to take the market up and see what happens at this point. So bulls were able to take this market up. So what do we do? Then we look at the bullish engulfing structure where it forms and then what market is doing. So where is the bullish engulfing structure? The bullish engulfing structure starts from here. This is where the second row of this started and this is the low. So if you extrapolate this up to this point, so this is your bullish engulfing structure here, because this is now confirmation and buy generated. But now If you pay attention, I say I will explain something here. So this is a bullish engulfing structure here. If you look at it critically, this is a bullish engulfing structure. Now, when bullish engulfing structure occur, we're supposed to have bullish confirmation candle, and this bullish confirmation candle supposed to do what? Generate hit a pizza for the continuation of the signal. But look at here again, there's no pizza for it to be confirmed. So what do you think that will happen? Market will pull back because the true bullish continuation signal will have a pizza to be confirmed to generate bullish continuation. So, and also since there's no pizza confirmation, market pullback in order to generate that pizza that will result in this, and that's the sense of pullback. So by pulling back, it has weakened the bullish structure. And how do we know that this market will go into ranging mode, that the trend will not rise? The answer is here. Look at this. If you look at this bullish confirmation a candle, this candle here, it discover one thing here, that one, it closes above the close of bullish candle, which gives us a good sign of bullish movement. Then, but it could not close above the high. So this is not like it's not a breakout. So if I close above the high of this bullish engulfing, that would have been a breakout. So it is not. So it closes below the high. And also, there is no sign of PISA 0.05 for it to confirm bullish continuation. Only thing that did that is now generate a buy signal with a higher PISA, then went down to hit that PISA in order to now help you to confirm that buy confirmation. So what happens again? So we're able to establish this. So it has now done this and I say, okay, fine, this is now my buy confirmation. So if you follow the same process again here, so okay, this is now a buy confirmation because it has pulled back again. So we're expected to see another bullish engulfing process at this level because you're following this level. Now, if you look at it here, this is high now. Now, this is a bullish engulfing of the sell candle because we're following this range. So pay attention. Now, look at the confirmation candle now. Now, this bullish engulfing candle also generates a buy signal. Beautiful. So this confirmation candle here, the market is under resistance, supposed to one, close above the close of bullish economy and also close above the high of bullish engulfing, which it never did. So it shows as a weakness in the market again. What happened? Market and pull back again into your trading stop loss again. So there's a weakness again into this zone. Then what happens again? You start looking for another bullish engulfing. Now look at this. If you look at it critically, you see that this one is a buy generator. This is the high of this candle. Let's look at it. The high is 486.1. This candle, the close is 486.1. So this is bullish engulfing candle. This is now. So now this is bullish engulfing candle. So look at the confirmation candle. Now the confirmation candle meets the requirements for buy. So what has it done here? The confirmation candle closes above the close of bullish candle and closes above the high of this candle. Do you see there? So market is in a buy state. I see market went up again, pull back here again. I see. And then now we have established this thing. So market may be doing whatever it's doing again, expecting the buy trigger to cross the neckline. So you see what market is doing. It's doing so. Another factor again, maybe this buy trigger weakening the market. So eventually, as the buy trigger crosses again, the market resume its upward move. So as market has resumed its upward move again, then this is your trading stop loss. So how can you generate another trend line here. There are another secret also that we can use to generate another trend line here, which is this. So when the market has eventually generated your buy signal, so you can look out when is eventually the buy signal eventually cross the market, and then you get a clean upward move. So at this point, we can get our trend line here. So from here, this is our trading stop loss. So at this point, as market hit this, so we can get a clean trend line at this because there's a lot of consolidation. So this is the first trend line, price in a sell state. This is the sell candle. Also, market reacted again. The low of the sell candle is expected to be our bullish validation, but the market could not go to validate it. I see that what happened? Market weakens and started selling down. So this one, see where eventually this was validated. So if you take this also as your bullish validated trend line, what does it entail? Market may go up to retrace maybe the resistance line. And when we have this bullish validation trend line also, market may not sell immediately. Why? Because your sell trigger at this point again, which is 20 moving average, need to cross the trend line. So the market was now ranging. Even if at this point it sells again, because it has not crossed, it reacted again. And also take note that whenever this market wants to react, it will tend to react above it so that you have another sell signal coming from above. And this is what market did. And once market break this validated bullish trend line again, the target is this to form the bullish neckline. We're not going to bullish neckline now until we master this one. So you see also that even if you hold this one as a supposedly validated, because I think the market has gone up here to validate it, and the fractal has appeared here, and it failed to validate. So this market is already in a bearish mode because once it closes above this trend line, we can buy targeting this, and market eventually did it. Now, one can also spot another strong trend line here. And what is that strong trend line? Another strong bullish trend line is spotted again when this 0.05 generated a buy signal, and then because it pulled back again in order to get it validated. So take note of this. When it generates a buy signal and then pull back to get the buy high of that buy signal validated, see what happens again. Then rise up again to generate a buy signal. So from here, this point here, this support here, that goes back to generate a new buy signal from the PISA 005 support original will give you also a strong bullish trend line. So we can get a strong bullish trend line. So what this is telling us on this strong bullish trend line is that market can pull back on this strong bullish trend line to offer support for it to go up. I seen it again. To offer support for it to go up. I seen it again. So, but if market should close below this strong bullish trend line, remember, it's also a strong bullish trend line also validated again, but it has a PISA support origin. So if market should close below it, so where it will target will be this PISA 0.005. And see what happens in this consolidation phase. It is acting as support. I see it. Then eventually, you see what happened again. Eventually, market went up. So at this point, you have to take note that this is now acting as a strong trading stop loss. So if market should break this, when it crosses over the trend line and market breaks, market is likely to sell down strongly. And that's what this market did again, set down strongly. So we have to understand this strong bullish trend line when this piece generates a buy signal. So when it generates a buy signal, we hold this place as our support. So market can pull back to this support. And also we already seen why. Remember this. Why did this buy signal tend to consolidate back into this zone? One, we say because when the bullish engulfing of the sell candle, this is a strong sell candle of PISA 0.005 being engulfed. Then we look at the confirmation candle. The confirmation candle did not generate buy signal with a PISA, which is a sign of weakness, number one. Then the confirmation candle did not close above the high of the bullish engulfing. That's why it closes above the close is as a sign of weakness. Then what it did also, that the confirmation candle or price extended to generate a strong buy signal at this point. But because of this failure, market tend to pull back to PISA dynamic support, which is a did. By doing that, it has now validated this level called a bearish neckline. Then, having done that again, then the market is within the bullish engulfing structure. Market rise up point the buy signal and then give us a strong bullish trend line. So that means that this keeps the market in a good state. And if you look at this now, you see that you have like a converging triangle. So in this converging triangle, market break here will sell strongly. Market breaks here will buy strongly. So as you see what happened here, market now gives another buy signal, gives another bullish engulfing again at this point with confirmation. Remember we say here that another bullish engulfing here, but the confirmation did not confirm or weak, but then closes below the high and close of the bullish engulfing, which weaken the signal again down to the support again. So this is what we need to master. We have to master the strong bullish trend line that has a PISA origin. Now let's look at again. Now let's look at this again. Look at this point again. This trend line should be activated to avoid noising in the market. You can delete them so that when you come into a new phase of the market, you can understand what is happening. So this market has stayed strongly, and we expect this market to stay strongly down to the origin, which it did. See, down to the origin of this, and that's what it did. So it has stayed strongly down to this origin. So the cycle has been completed. So as the cycle has gone completed, we have another sell candle here because this is a sell candle of the 0.005 support origin. So this is a candle of our interest. So if we pick this candle as our candle of interest, we can project it again into the future and see what happens. So if this is a candle of our interest, so our interest here is we are looking for to exit of this sell, because if you are selling here, where will you exit? This PISA is your trading stop loss. So this is first exit here. But in this exit again, what happens? Bulls are struggling. Now look at what happened again. Clearly examine the structure at this point. The trading stop loss, which is 0.05 bigger one, I generated a buy signal. Now, when it generated a buy signal here, the bullish engulfing here of this candle has not been confirmed. Now, what happened? It generated a buy signal. And when it generated a buy signal, also, the PISA, the lower PISA is supposed to confirm it. This is now because it's not there to confirm it, and it's acting as a trading stop loss. So market pull back again, then validate the high of the second. That means with this, we can get a bearish neckline starting from here. So we got a bearish neckline, which is so powerful to us now. So the next thing will be, if bulls are serious, they will close above this. That's number one. When they close above it also, we expected our buy trade also to close above it, which eventual market did. And this, despite this again, even if we're taking a buy decision within this zone, we wanted an engulfing of this thing to confirm our buy. Now, what happens again? You see that, look at here critically. You see that when this sell, the neckline here was formed by market hitting this pizza now, that this is a sell candle here now. This is a candle. Look at this candle critically. If you look at this candle critically, discover that this is a candle that hit this pizza here to do what? To generate the sell and also to validate this. So we have it. So this sell candle here, what happens? So there's a bullish engulfing of the sell candle. So this is our buy signal here. Now, but this bullish engulfing of the sell candle need to do what? Help to see whether we can get an engulfing of the sell candle of the pizza support origin, because that's where this market cycle has completed by reaching this origin. So we take note of cycle completion. Now, you see that the next candle now, which is now the confirmation candle, you see it now. So this confirmation candle at this point, because it's bullish engulfing, is able to close above the high of bullish engulfing, and also the close of bullish engulfing. So this is a powerful candle. Do you see there? So, and then it's what market is able to form bullish engulfing structure. And having done that, what happened? The market has been into a buy state. Then this is now your trading stop loss. The price is not above the bigger pizza and this. So what happens again? What do we do now? Now this is now the confirmation candle of the bullish engulfing of this smaller structure to give you bullish engulfing. So see market and pull back into the structure to give you an opportunity to buy, and you did market and pull up. Now market is set to go out strongly. Why? Because everything is in place. Market is above the neckline, number one. The bullish engulfing structure has been formed, number two. Then the market is also set up a trailing stop loss, number three. So at this point again, we can get then our strong bullish trend line, because our strong bullish trend line at this point now will be, you see that when markets validated the neckline, various neckline, then there's a buy generation here, which is this that become validated. So the secret here will be when you see that bullish continuation and you're able to get the pizza support origin of 0.05 connected to this. So we have, this is our future support that market can pull back here in the future if eventually it generates a sell signal. Now we're going to monitor this. Let's change this column to this. So this is telling us that market is in a buy state, and being in a buy state, if we only get bullish continuation signal, we can trade, and this is now our trading stop loss in the market. Now, as we are now buying, so the question is also here: can we sell? If you look at here, can we sell? Now, this is the candle that breaks this. Then it says, okay, you will sell if price, you take from here again, if price will close below this. Fine, you see. Now we can sell. Now, what market is now? There's a bullish engulfing of the sell candle. So it's a concern for us here. So what do we do? So we pause. The bulls are willing, and maybe they want to form a validation. And this is what they did. They eventually validate this. So we have our validated trend line. Now the rule now will be, if actually want to buy, let the bull close above these two trend line, they will continue and buy. But because they could not. You see, this because for bullish continuation, this is what happened. Now what happened? They could not. See what happens again. And also following the same principle again, then this also generates a buy signal. And see what happened. So the buy signal was engulfed from market side again. So what happens again? Now let's see whether this market will continue upward. So this is already our validated trend line. So this market has no option than rally to come and test this piece. Let's see what happens. You see it again. See that even when this market reacts strongly again to retest this, they could not market continue to come down to retest this. So see what market did again. So and remember that this is telling you that this one is telling you the market is in a strong bull state. This one here. So that means that any pullback will offer opportunity to buy the market. So you see what market is doing. You see that trend line. You see market is staying upwards until eventually come to test it. But do we make some money out of this market? Now let's go and see whether I can make money. So at this point again, so eventually this market begin to consolidate and hit here, and this is our target. So where's it? Now look at this again. So if this market will go up again, then where it's supposed to get bullish engulfing of this. Do you see? Now what happened market? Now market from bullish engulfing of this. So the third candle of this has been engulfed. So having been engulfed, the confirmation candle, and also remember that when it's been engulfed, people can hear. So you see what happens here that it has been engulfed through this process here. This generated a buy signal that led to this engulf. So there's no because engulfing and confirmation supposed to hit pizza. But now at this engulfing of this, let's look at it now. At this engulfing of this and the confirmation, there's no pizza resistance. So what does this tell us? It tells us that market will correct. And if you look at also the confirmation of the engulfing closes below this. So this is also a weakness in the signal. The market may pull back towards its support zone. So if we carve this zone, we are gotten an engulfing, there's a weakness. If we carve this zone and project it. So if we have an interest in this market, our interest is that until price break below this low, that's when we sell. But otherwise, we'll start looking for bullish engulfing and then confirmation in this zone. Now, the bullish engulfing of the original level again, because this one failed again. As I'm watching another bullish engulfing, we got here, it failed. Then we got another bullish engulfing here, perfect. Then the confirmation candle failed. So what happens? The market is weak again. And if you look at it, the market is weak. Then what happens here again? Then we have bearish neckline, generated a buy signal. Then there's no confirmation candle. This is also as a trading stop loss. The market come to validate it. And having done that, we have our neckline in place. Now, when we have neckline in place, we says, okay, that this market, for it to buy, we needed the buy trigger to cross number one. We needed also a buy generator to do that also, and also with confirmation candle doing that. So you see, market again pull back again to validate this. So when it has done this, now look at this. When it has done this, then pay attention critically. There's another bullish engulfing candle. Do you see it again? Because it closes above this. Now, this confirmation candle here has tell us that the market is going to go up. But for this market to go up also, we needed a buy generation. So you see this again. Now the confirmation was engulfed again. So there's a rallies of weakness again. Eventual market breaks above this. Now we have a trend line at this particular point, because at this point again, market has now generated a trend line. Even if we neglect this, but this was the market is still in a bullish state. Then we can look at the point where this neckline was validated. This is where it was validated. This neckline validation, and this is where a buy trend line was established. So taking this piece here and then connect here will give us another strong bullish trend line of PISA 0.005 origin. So we have this. So this is another bullish trend line, which if market weakens, it can come to this. So at this point again, we're able to generate our trading stop loss in this market. So let's watch this. So here we are buying. We're holding our buy. So where do we exit? Where price will create a sell signal here. So let's look at it. Where do we exit? This is point of an exit. So now if we exit at this point, the market can consolidate to form and find support here. But before then, let's look at if we can get a validated support. Now the factor has appeared here. So we can have our two trend line there. There is a bullish trend line of the last visa standing after the knock. This is another validated, this is a support also form, which is a low of the second candle. But can it be validated? It will become validated when price knock here. So now price is in the consolidation phase, because if market will go up, close above this and continue up. So here is a consolidation phase. So in this consolidation phase, we expect the market will reach here. So eventually, price give us what? A validated bullish trend line, which is this. So not this one, but we can leave this one. So connect here. So if price should close below this and 20-moving average crossing over this validated bullish trend line, the price is likely to come here. So let's establish our validated bullish trend line now at this point. So we have established this. So let's see what happens. So at this point, the market, this 20 has crossed this second candle. See, market is ranging. So sometimes market can come out to retest this. Now see what market is doing. It can come to retest this. This is your trading stop loss again. So market is consolidating, picks up move. Again, see what it did again. Market sell down strongly. You see here. So here one might, experience some loss here, but our carefulness at this point will be that in as much as market is below this validated bullish trend line, price can come back to retest it again before pullback. See what he did again. So since he could not sell here again, I sell again. So already the market can retest it. So offers a pullback, but eventually we'll see what market did. Market pulled out strongly. So then you can now see that in as much as price is above this your neckline strong, this market is still in a breach phase because it's consolidating until gradually ends the buy here. So is it that once you are in a bull state, because this is your next line of decision making at this point. So once in a bull state, you may not even need to quiver, oh, can I, exit my this and say no? You may not, because if you eventually book your profit here and you don't want to do this, so you may just wait again, maybe for price reach for me to take a decision. Otherwise, you may hold your buy, then be doing your trading stop loss. So this is like a warning again. So at this point, you don't have any other thing. So if you want to sell at this point, you may be looking for price. If price will retest this and form a pullback, that's where you can sell. So you see exactly see what market did, and it pulled back to Now this is our major trend line against this. By market breaking this major trend line, we know market we're going to set that strong. And where you may be looking is at this point. And that's the, let's squeeze the chart. So you see what happens again, that at this point again, when market breaks this, the target is this origin, and price eventually comes at this point. So, and when price comes at this point again, we have another candle. Okay, we cannot even reach at this point again. So we don't have a sell candle of this origin. So market then pull back at this point. We expected market to hit our target, not hit target. And then this is now your trailing stop loss. See, it's very visible and very clear. Is a trailing stop loss. So here it tells you to go out of your sell. And there's a bullish engulfing confirmation. So if you take this bullish engulfing with this confirmation candle here, this is a strong bullish engulfing visible, and the confirmation candle closes above the high and the open, and also hitting the pizza. So market is rallying to go and then generate a buy signal, which it did again. Now if you look at this point again, it gives a buy signal. Now what happens again? Now we are looking for, or if this buy signal, we are holding our buy. These are trading stop loss of the buy. So, but if markets break this trading stop loss, so that means that you're going to form a neckline, a bearish neckline. So we have a bearish neckline validated. So on this note, if markets should go up to close above the validated neckline, we'll be in a buy mode. And also we expected another bullish trend line to rise from here and connect it from here. And that's what we've been saying before. So look at this again. So it's coming clear. So this, our neckline, will push market in the buy state when price closes above. That's beautiful. The 20-minute average is also like your trading stop loss, also crossing, validating your buy. Now, how do you establish your major bullish trend line? So let's delete some to have a cleaner chart at this point. So here we have our neckline, because this is a neckline. This is your buy. When you pull back here again, then it generates a validated in the buy. So you have your bearish neckline. So if the bears are serious, they'll be going down this neckline. By breaking the neckline and also confirming this, so we have our strong buy trend line. This trend line is very, very important to us. If market should break this trend line, market will come to this. If you look at this again, so even without stories again, you hold this as your strong buy trend line. So market can pull back to it. Just market breaking again, break this. So you see market goes into a strong sell again. So this is also a very clean one again. So, but if also you want to follow the same logical approach again, so this is you are gotten your major neckline. Now this did not give us the bullish engulfing of this origin. So, but if we hold this one again, you see that this is where we have a strong bullish engulfing zone. So this is where we have it again. Then what happens there again? Confirmation again, neckline. Then we make money here. This is your exit. So can you exit here? If you exit here, you may exit based on the principle of this is your sell candle. Number one, this is the low of the sell candle. And see what happens again. Market also validate. We have to study this in very well because this is sell candle high. And what the market did again, market went up, then break it again to form this. So this is neckline. Sorry, this is a sell candle low validated. Now you see what market did again. Market now closed above. We are buying. See, bulls are taking the market up. So market in the buy state. So you can start watching. See, price closing below is putting the same one. Close below this thing again. Say you want to retest it, but it fell. So that's why we say that once price breaks above this, market can continue going up. Or if the momentum is there, closing above it, there's a weakness. And if you look at your sell trigger now, it's now shifting away, shifting away, shifting away. By crossing below this, your major validated bullish trend line of this pizza origin here now pulls the market into a strong sell mode. You see what happened? That despite all this rise, market sell down strongly. So we have to note that it requires price to cross this trend line here for you to sell. This one is supposed to be from here at this point here. Yes, correct. So, so it requires price to cross this powerful bullish trend line of PISA 0.005 support origin for us to consider selling in the market. See now. You see what happens here? It crosses, so we sell now strongly. So where do we sell here again? So if you look at here again, the price will not reach this zone. Okay, price pull back into this kind of what people call the order block again. Find the bullish engulfing order block. Fantastic. But notwithstanding, now let's look at this. Now, as we're selling now, we're now saying that this pixel here will generate buy signal again because we're using it as a strong buy generator. Then validation by pixel reserve region give us the bearish neckline. Now, you see what did it generate buy signal fail and got it validated. So we have a strong neckline here. Then notwithstanding that strong neckline here, then the question will be which one is our bullish candle we are talking of, because there must be bullish candle buy signal which you are looking at. Let's see what the market did. Market pull back, pull back, pull back. Despite our neckline in place, we wanted to go and create a neckline in place. So you can understand the simple logics of the market. So you see that market now, if we hold this one, this bullish engulfing here with a confirmation candle validation that led to this, fine, there's a support here. We can still say, fine, this is the bullish engulfing. Fantastic. But look at what market did. The market now run it down and come to generate another sell candle with respect to PISA 0.005. And which one is a candle? Look at it again. This is a candle, this small candle. Let's expand so we can see this in clearly. So you see what happened? So this is a candle now. This is a candle. Now what happened? This is a candle. Then this candle is supposed to be sell confirmation in order for market to continue going down. But what did it do? Now the sell confirmation went up strongly and then formed an engulfing of the sell candle, telling that, oh, this market is going to go up. Despite the market is above your neckline, but let's just analyze it strongly so we can understand. So when it forms this again, you already have in mind that there's an engulfing so that though it fails, then if you look at the confirmation candle now, because now this is your confirmation candle. So if this confirmation candle continues going down, you will sell. But this confirmation candle now went up and closed above the close of the bullish engulfing, because we say the rule that the confirmation candle will close above the close. This is the bullish engulfing now. This open and close. So it closes above the close again. It closes above the close, which is this, and also closes above the high. So it set the market in a strong bullish mode. And outside that again, your buy trigger, which is the moving average, has crossed number one, then this market is going to go up. So you see a lot of evidence is here. That's number one. Then number two, the confirmation hand candle has closed strongly above. That's number two. Number three, price is above the neckline. And also, if the remember our bullish neckline, though we have not emphasized on that, it discovered that if you take your trend line and connect it from the piece of spot to the last existing piece again, you see again, you see what happened. The price could not close below this. So this is a whole evidence of market went up. Now come back to this space so you understand the same thing. Look at this point. When this origin here, let's use now when look at this origin. I might see the second candle here that breaks origin. Now, if you look at this, take your trend line and connect from here to the low of the second candle, because that's the second candle. So this is the second candle. This is second candle support. Now, see what happens to the market. That if price should break below this support, that's when you buy. But see that the second support here, the price could not even rally down to here to give you sell confirmation signal. Then rather what happened? Market begin to rally, waiting. This is your strong sell candle. Begin to rally within this zone. Then they're able to generate bullish engulfing on the second candle, put the market in a buy mode. So if we are following our analysis in this form against the market, now this is the current state of the market. So you see that with this, we can trade comfortably in the market following this simple analogy. Now, market has generated this. So can we sell here? So the answer is let's do our analysis. Now, this is your buy. Now, this is your sell candle. And the sell candle turn bullish again. See what happens again. Then generated buy again and validated here. So this is your the last pizza at this point. Then this last pizza at this point. The next one is the low of the second candle, and then see that pizza confirm here. So this is also validated. So you see the thing we're saying. So market here is now in a consolidation phase. Remember this trading stop loss, so we may not be quick to sell. So because we may not be quick to sell, so market is in a consolidation. So if you take your profit, you can enjoy it. Then this offers sell again. So if you follow this into sell, then you exit at this point. So at this point again, if you hold this one, we can't hold this one as a validated bullish trend line. Okay, yeah. No, we have this trend line here from this point. Okay, so if you take this point here again, if you take this point here again, then what happens? Then you have a validated, because this is a sell, they found support here, and then this is a validated bullish trend line. Now, on this validated bullish trend line at this point, now you see what happens. You see that on the validated bullish trend line, because when you have your validated bullish trend line, then what you'll be looking at is 20 moving average to cross below, and you see what this market did. So by this ranging again, because market they have it in mind, we don't even know. But by this consolidation, you're able to push the 20 moving average. into this. And once it has produced this validated bullish trend line, what the market did, you see, a validated bullish trend line, eventually closing below this, and this trend line also is a sign of weakness. So this is your sell market. So we are holding this market bearish at this current state. We are holding it, so this is our trading stop loss. So we're heading it in bearish at this current phase. But how far can it go? How far it can go is a function of one. Because now let me emphasize our bullish necklines so you can understand it. So if this market is now selling, and the trading stop loss is also following, once we find a support may occur when it breaks this and the next support level. Look at this. This is next fatal support level. So if this market should open and break this support, you may want to retest the broken support. So by doing so, you may be rallying again, maybe to validate that support. So when you break this this piece as 0.005 candle, and this is your sell candle, then and it breaks this in again. So if it goes up and then form a fractal support here and then validate it, then we can now have a validated neckline at that point. So a price should close below that neckline, because once it's validated, remember, take note, the difference between your bullish trend line and validated, or neckline and validated, is the ability of your 20-minute average to cross the validated trend line. So if market will do this, come to this place and have a validated neckline, we may not want to say it because 20-minute average has not crossed. Now, if we want to pick a neckline, this is a candle now, the last candle that is standing, because the piece now has been broken. Look at it here now. So if you pick here, from here to the last piece of 0.05, you see here, if you connect it here, this is the neckline. We call this one bullish neckline. Please take note of this. When we have it pizza of 0.005 to the sell candle, the last one, so is a bullish neckline. This is ordinary bullish trend line, bullish trend line validated. But once it involved with this one, is a bullish neckline. So you see that now price is below the bullish neckline. So market is in a sell phase. So this market may even come to retest this. If this market closes here by market open again, this candle is also your sell candle of the neckline. So you can equally have the sell candle neckline. So then if market should break this, remember we'll buy if price should close above this. If market should close above this, we resume bullish move. But once it break this also, so you see also at this point, you can easily cut your loss very quickly. At this point, you can cut your loss very quickly, because if you form bullish engulfing of this candle at this point, that means that this market will have momentum to go up. So this candle is of very importance to us based on what happens next. So if market should not break this small candle here, which is sell candle, please let's take note of this very well, because this is candle that break this the last fractal, sorry, last pizza. So this candle, the engulfing of this candle will produce bullish continuation, no matter what happens. So, but if it is not, then breaks, this market will continue to go down. Fine, then this is your trading stop loss. Remember, as we said, as it's going down and find a new support and begin to come up, that will give us a validated neckline. And the reason why it may break this one and start coming up, because you see again that if you look at here, this thing has not crossed. So as it's going down and causing crossing, it may refine the support and then tend to react. So by the time it's tending to react, then what happens? Our trading stop loss It's also coming down. So if eventually it hits that stop loss and also validate that support, then we adjust this one and get a validated neckline. So our interest at that point will be, oh, if we're not too sure of buying, we wait for the engulfing of this to occur. If it actually occur, then the neckline of our supermarket start going up. May will not occur and then market breaks neckline here. We'll be careful and holding until the 20 MA crosses the neckline. The market will sell down strongly. So if it sell down strongly, what are our likely support levels? So at that point again, you can invoke your Fibonacci to say, okay, that from here, remember at that point you have gotten your sell because if it has broken the validated neckline and this one cross, so your sell at this point again, they say that the next, if you could break, the next support will be at this point. So market may go up here to form a validated neckline. Once the validated neckline is broken, the next support will be 61.8. If it breaks here, there, and at that point, what happened? The PISA now 0.005, which is the secondary PISA, will begin to act as our trading stop loss, which will be our next buy generator. So until market breaks this neckline, all these three necklines, neckline validated. So once it breaks these three necklines, then that's when this secondary PISA will become our trading stop loss. But if market finds support here and form bullish engulfing of this second or this market is going to form what? Another bullish continuation to come and then hit our what? Trading stop loss and continue going up. So this is how we follow the market. So let's take this into a higher time frame, then so that we can use it to understand markets at a glance. We are doing this on a 1 hour, fine. But let's look at a monthly time frame. So we can use to understand market at a glance. So if you look at monthly time frame, you see that the same rule applies. And also, if you understand this system, you can trade even monthly time frame and hold your trade comfortably. All thing you'll be managing is just pullbacks in the market. That's all we're managing. So we're removing this small trend lines. We could not highlight on our own when doing it. So I think we're almost there. We're almost there. So we can have a clean chart. Beautiful. So then on our return on this thing. Beautiful. So now if we look at monthly time frame of SP500, we discover that if we have had this knowledge on time, then we would have made much money. If you look at here, look at the where we can see charts from 2001. You see the PISA 0.005. Let me remove this so I can see something here. Now this is the sell candle. You see that the candle that knocks the PISA, and this is support original, is a sell candle. Let's take note of this is sell candle. It takes an engulfing of this sell candle to produce bullish continuation. So if we're seeing the stock as always in a bull state, so any corrections will come towards this, which is a decision point, or this one. This is a decision point. This is a decision point. it moves up again. So in 20, this is a decision point again. So the market is now in a good state. So what means that if market, you know, finishes its bush run and start correcting again, this one will be another decision point in the future. So we take note of that. But how do we then establish our trend lines and our necklines? Now, the bearish neckline, because if we're now interested in the, because we're taking an assumption the market is always in a bull state. So our major focus is establishing the bearish neckline so that when market breaks above the bearish neckline, we can resume our upward move. But the bearish necklines need to be validated because otherwise you will not know when the correction will take place. And that's the essence of that 0.05 coming into play. Now, if you take note of this and says, okay, this is bullish engulfing, you take the high of the second. Someone can still take note of this, that this is an engulfing candle and this is confirmation candle, even without stress. So that means that the engulfing candle and the confirmation candle closes above, sorry, the high and the close of the bullish engulfing. So it puts it in a buy state. And also this generated a buy signal. So you see also that the market is in a bull state. So what market did that? Market can come into this zone and offer you opportunity. I want us to take this one here before we impose 0.05. Now you see that this is because once this is generated your buy signal, the 0.05 is now acting as a trading stop loss. So you see that in this one now you can hold your trade, managing the pullbacks. So for people buying stock, so that's why they buy stock and hold the stock, because if you are using the signal, they buy stock and hold the stock. So when we maybe consider selling their stock, maybe at this point, they can say, okay, they want to sell the stock because they don't know how long the corrections might be. That's one secret. So you see that then it can now take a trend line. That's if you want to trade it also like this, that the high of the bullish engulfing, you can take from the PISA 0.05 PISA origin to that high. So that forms your neckline. If you look at this point again, you consider this again. This is bullish. The sell candle, you take it to this point. Let's find the high. Now look at the bullish engulfing candle. Now the bullish engulfing candle, what happens here? This is the confirmation candle. The confirmation candle went above the high of the bullish candle. Are you seeing it? But it closes below the close of the bullish candle. Measure it. So everything is the high is 2176.5. Measure the high here. 219. So it is confirmation of bull. Measure the close. 2172. Measure the close. 2168. So it's below. So that means that the market has put market telling you this market is bullish. But because of the close, that there will be some consolidation. So don't be in a hurry or buy this market. And that's what market is doing here. Having established the buy here. So you see then what is your neckline? Your neckline also will be from this pizza resistance origin to the high of the bullish engulfing. And you see there's some consolidation of the price closes above it. So here you resume your buy. So this consolidation also we have established again. So we'll come back here again. So for the whole year, you are in profit, and this is acting as your trading stop loss. So at this point again, market generates another sell, then which is like a correction. Then look at what happens again. Look at the high again. Now, what is this is the high. Now this is a bullish engulfing candle. See the confirmation again. Now the confirmation candle did what? Confirm that this market is going to go up. What happens again? You can now establish your neckline from here This has 0.0 origin to the high of that bullish engulfing. So now this confirmation say what market? The market pull back again into this again. See again, went up again. The market has been in a bull state. So despite the pullbacks again, this is your trading stop loss. Market resume upward move again. You can measure your target. If you plot your Fibonacci from here to here, you can target 161. Though we did not discuss that. If I measure from here to here, we can target 161.8. The market reaches our target. It's not this way back. If we can come back to the measurement of target, the market push up and hit your target here. See again, market begin to correct in this year, 2019 again, pull down strong again, gives you another sell candle. I see there's a rejection on the sell candle. There are some pattern things we can discuss about the sell candle and know whether the sell will go down or not. So on this point, you see that market again form a rejection, and this market pull back up to this. And now look at this. We look for bullish engulfing, and this is now like bullish engulfing because it went up to the high of this. Then though it pulled back, but it closes, above the open of the sell candle. So if you take this one again and connect it here as a bullish, this is your confirmation candle, which is also our key parameter too. How does confirmation candle tell us whether the market is going to go up or not? The confirmation candle now closes above the close of bullish and also above the high. It's powerful. So see what the market did. Market rise up strongly. This is your stop loss again. Then market begin to correct in the year 2022 down to this again as our decision point candle. Now on this decision point candle, what we see again? Can this stock sell that strongly? We have a cavity again. The cavity again that this market that reacted here again, then went up to this, and this is also like bullish engulfing. Again, do you see? But it failed and collapsed strongly. Excuse me. Now, if we are going to a bullish engulfing signal, but it failed and collapsed strong. So the question is, if this market is going to go up, what happened? We can now take this structure here and start looking for bullish engulfing and the confirmation of the bullish engulfing, as we said before. And remember, that's why he said that 0.05 now will help us a lot. Now, if this is the high of the bullish engulfing that failed, remember from the high, you plot your trend line to form your neckline. So we can get this also as our neckline because that's the rule. The high of the bullish engulfing, the high of the bullish engulfing. So this is high of the bullish engulfing. Then I will say the neckline. So our buy trigger, which is 20-moving average, has crossed the neckline. So put the market in a bull state. So you see again that crop puts in a bull state, a venture crop puts it in a bull state, a cross puts it in a bull state. So if you extend this one then cross, so it has put this market in a bull state. But our challenge here is that market is within the bullish structure. So we start looking for an engulfing. So an engulfing candle will be the candle that close above the high of this. So the high is 4186.8. So now let's remove this. We can put it back again. Let's check this one. High 4186.8. This one high. So close is 4184. It's not. It's not. But high is 42. So this is also this is this one. Let's say this is an engulfing here because it closes above. Let's look at the close first of this. The open of the bearish candle. The open is 41.38.2. 41.38.2. So this is like bullish engulfing failure again. 41. No, the open. The open 41.38.2. 41.38.2. 38.2. So the candle that reaches this level will give us the bullish engulfing candle. So this one is also the high 41.97. So this is a bullish engulfing again, but it failed. So when you establish your neckline this again. So let's look at this one. This one did not reach there. So this one is also bullish engulfing. The high is 42, the close 41.84. So the close is 41.84, wide open is this. So this is bullish engulfing again. Also, now look at the confirmation candle. So the confirmation candle of the buy has also closed above the high and the close of the bullish engulfing candle. So this puts the market in a buy state, and the market went up strongly, then pull back into this zone. See how sharp it went to the back zone again, picks another, and continue rising. And this point the market has generated then a buy again. So this is your trading stop loss. So this is if you want to analyze this market using the 0.005 alone without the primary decision. But for us to establish our trend lines in the market, so what do we do? Now, okay, I remember something I said. If you want to measure your target, if you want to measure your target, you can pick once this signal is generated. So you have PISA resistance origin and PISA support origin. So take the range of this range, then you can extend your profit to 161. Sure, extension might be 200, but the one that's too short is 161. So if you look at this, you see that the more market breaks above the 100, so your target is 161, sure, extended to 200, beautiful, sent to 261. This is your trading stop loss, so you are in money. Then, if you take it here again, you generated the buy signal again, on what we said again. So your target here is 161. So market puts your target before it pull down strongly into this again. If you take this one again, when this is happening again, you take it from here to this point to measure your target because price has broken this. So your target is 161, extension 200. I'll say it again. So then the market has also broken this trend line again. So if I'm generated, so if we take this and this point again, so our target will be probably 161, which is the market may push to 5681. But will you push it at a straight? No, there might be some pullbacks. And now what could be your pullbacks? Your pullbacks is that then that's when we can establish our bullish trend line. Now, what is our bullish trend line? If you look at this market here, you see that we can connect here as our pullbacks. So this is our support. So this market may ride down to this support again, may ride it down, may push to this place, or may ride it down to this point and go up. That's what we expect in the market. So this market is in a bull state. So, but how do we know this? So if you use this one as your bullish trend line that started from here, so all we're looking at for is any pullback again, using lower time frame and get buy signal, we'll continue buying the market up. So until market breaks this. But if we impose our PISA 0.05, it may offer us some clue. May offer us some clue in the market because that's what we need to trade in a lower time frame. Remember, this is monthly, but with this, you can hold your market to run for months and years if you have a perfect entry on the bullish confirmation signal. Now, if we impose this, now let's go back here. Let's go back from the origin. Now you see that When the sell signal was formed and it is being engulfed, that your 0.05 is a primary buy generator. Are you seeing it here again? So it will generate your buy before even the bigger one will generate. So that's your confirmation. So begin to initiate for you the trading stop loss, and then also what can validate your neckline. So if you look at here again, you see again that it generates a buy signal at this point here. So it gives you a good opportunity again to buy the market again. If you look at it here again, you see that when this thing happens again, it generates buy signal for you and it's acting as very stop loss. If you look at this one again here, you see that it is the first buy generator and also the confirmation of the bullish engulfing. Now look at here again. If you remove all these lines so it can be clean, you see that when it is when the market forms bullish and engulfing, look at it here. You see that engulfing of this, it is the confirmation. But being the confirmation, what happened? It fell strongly. It collapsed strongly. That's why market creates divergence. On creating divergence, but it has offered you the buy generation. What happened again? Market begin to rise again. Because at this point, you already have your zone. This is your zone, the resistance zone. So what happened is it generates buy signal. This is your trading stop loss. So that's why people see what market is doing. Now, if you look at the current situation of the market, that's what we're saying. Could this market push to 161? So we don't know. But what we're having here now, as we're finding opportunity, we'll be buying the market, pull back, we'll buy. But it has given us the trend line now. You see, it's validated because it has this buy, pull back again. So we have at this point here, the last piece here is our bullish trend line. Then the second low is also our bullish trend line. Now what the market went up and then validated. So the second one here is bullish trend line validated. I see here now. So this bullish trend line validated, we can change the color. Let's change the color to maybe dark orange. So this bullish trend line validated now means that if this market will be rising up and weakening, that is at this point now we can say. So this is our trading stop loss. So the trading stop loss is telling us to hold our market, then holding our buy. So, but holding your buy here means that you have already bought so early at this point. But at this point, what we're looking at going to lower time frame, where market pull back and there is another bullish continuation, you buy because this one now will become because this will be your exit. Then for this market to start sell, market need to break this bullish trend line and validated bullish trend line. Now let's impose our moving average back again into this. Now, what do you see here now? You see that the moving average now, based on market sentiment, because saw that when we are analyzing the 1 hour. Now you see that the 20-moving average now is crossing back again above the validated bullish trend line. So what this then tells us that if this market, no matter what's happening, this is now is like also you are trading stop loss. So you see that this 20 will cross over again. By the time it crosses over and market start generating sell signal, then by the time it crosses back again, so rotating again, forming like 8, crossing back again at this point, that's when we know that we can have a strong sell. And it's at that point that market can sell down to this. So for now, market S&P 500 is still bullish. So any pullback again will sell. But if the sell eventually maybe engulf this, we don't know what may happen by March. We don't know what may happen by March then. So, but we are following our trend line. So we're scalping by until this will happen. So that's the information we have here. So this is the cross again. By this, we start seeing crossing above. So they are trading stop loss. So someone can say, okay, maybe you are saying you're to buy price closing. So this is how we analyze market. So if you look at it again, you see here that When this is the buy signal, I see okay, my trading stop loss again. Then what happens here? You have this again, see there, the market write it down. Then went to do this again, but it could not validate. So the low, this is your low of the sell candle again, connect the low. Say price could not close up by closing because the market set to your target. Then here is your decision point again. So see the same thing happens here again. If you take this again, when you are in a buy state again, so it's your trading stop loss here again. This is the trend line. This is the validated. You say again, market is right above it. See again, then validated this iron. So you see breaking below it again. You said up to this. You take your decision here again. So if anything happens here again, you see again, see what happens here again. So from here again, you get your this. This is your sell candle low. So see it again. Low of that sell candle. So if you use a finance to take your target here, so this sell candle. So it's a market close below it, market reacted and close, so see break and break, and this is your target. So eventually, even if you're holding this also, see that market closing and pulling market back in a full state. So but to avoid noises, so we can remove these lines. We can remove these lines to avoid noisy trend lines. So this is so is it that these trend lines are holding. So mastering this will help us a lot. The same happens on the weekly time frame. The same principles because what works in time frame works in all. It works in all. Now, if you look at anyone here, see this is your sell completion. I see it again. See it again. So market here. So falling back here is your target. See it again. Target on bullish confirmation again. See again. Target. See what happened again. Market rejected. Then buy confirmation. The market went up again. Look at here again. See what happens here again. Market went up. So with this, you can be establishing. This is neckline validated. So because this is your sell, the first sell candle, which is the last piece standing. The second candle low. You can pick this again. Now you are wondering, okay, in this market. Now, if you ask me, see what market, you see your sell trigger now, exchange moving average crossing this, then this market is going to sell strong. Do you see? Then you see market are trying to validate the neckline, and they did it. So this neckline validator. So we're able to even get your three trend lines. So what happens? See market now is struggling. See a strong sell below this, see a strong. You make your profit. So market is definitely targeting here, and then if you eventually reach here, you have your decision coming. So see there. So here now we can expect bullish continuation in the market. This is what happened. So this is how. So here is also your decision point in the market. This is also my decision point again. So market has given me buy signal here. I see now, but if it's a now this is buy, this is bullish engulfing of this candle. See the confirmation candle weaken. So this shows that this market is going to come down because my bullish confirmation on the buy failed. So now here is my good decision candle because it embraced this already. So here again, this thing bullish engulfing confirmation again. See again. So market continue upward. So these are the logics in the market. So from the weekly perspective again, so that's why now we have to be careful because later market may be going to consolidation. So by going to consolidation, what we're expecting here, even someone that says, okay, if I assume this is the last one, where another one opens again, may open somewhere here. So it is break of this candle, this candle now will give me the last piece that's standing, and also the candle will become my second candle, not the last piece. So again, so if market should close, the market will start correct. Where we may correct towards this again or correct this. So what I need to do here is to get my sell candle low support again. If it goes and validate it, I have a validated bullish trend line. If you crack it again, what happen? Market will sell down to this one as my decision point. Look at it again. See what happens again. So the sell candle, strong bullish engulfing. The bullish confirmation candle here is very powerful. It means the requirement of strong bullish engulfing by closing above the high, and also what the bullish engulfing, the market went up strongly. So we're going to stop here and we begin to process this in 1 hour time frame. The things which we have did from the beginning of the lecture, 4 hours is there. So all our interest us to know where we are not too sure, we leave the market. Then if we are holding the market to bullish, then we can establish our neckline. If you look at here again, you see that this market also has given us a bearish neckline here, validated. I've seen it. So if that be the case, so what you need to do is to do this and do this. Wait, be patient enough. Waiting when the price will cross this and also your buy trigger crosses, and then you can enjoy your profit. So that's it. So even if I'm not sure of what to do, let me look for the the neckline formation and maybe probably its validation. So this will have been validated. So if also I did something like this, because as they could not validate it because they have knocked it to and validated it. Despite that, see what market did again, crossing and crossing again. So you make your money. So we can use that to take decisions in the market. And also, once we hold our buy, let's not panic and let's not even switch to any time frame. Hold your buy, be using this as a trading stop loss. And also, know whatever happening here, even market consolidation, you book your profit. Wait again until you get to another bearish candle, then you can zoom up. So, this is our analysis. So, for us that are say on the 4 hours again, see what happens here again. Say decision candle, bullish confirmation, and this again. So, market is now correcting. So, if this market should correct, what happened on the 4 hours? You can get if it breaks the next candle opens again and breaks it again. So let's assume that let's take an assumption that if market opens on Sunday, being 25th of February 2024, now that this one may be the last candle. If this candle now, if peace out comes and next candle breaks it and forms the low, what we need to do is to use it to form the assumed validated bullish candle. So if it breaks again, so this market will weaken down. But if market now rises up and continue trading, if you turn my chart like this, so you can see something so that we'll not be using the dimensions of the market to weaken ourselves. So if this market could cruise and continue above it now, the boost will resume its uptrend. So let's not be deceived by the way the chart looks like. Oh, this is up. Nope. So if you squeeze down again, I hope you will understand this case. Look at it now. So let's not be confused by the magnification. So this market could predict a bullish continuation. But if it breaks below again, market will sell down to this. So this all and what we're going to stop. So our practicing this will help us to justify that these signals are buy generators, which may be us to validate bullish engulfing pattern somewhere. But if you look down and check where you may see what it's trying to tell us, because look at here again. It's a buy generator. What means, oh, this buy generator, can it confirm this as a bullish engulfing? Look at this. So you see, oh, that's what it's saying. Look at here again. Oh, what is it trying to tell us? Where is the bullish engulfing? It's trying to validate. Oh, this is the sell candle here. So if we take this range again, oh, you can see, oh, this is what the market is trying to tell us. Oh, this is what it's trying to tell us. See, no, this is the bullish engulfing. It's trying to tell us that this zone is a buy zone. I see that you sell when market valid. You see what they did again. So anytime you spot this, there's something is telling you. What is the buy zone is telling you? Oh, if this is again, where is support? There's a support somewhere here. So this is like your bullish engulfing zone is telling us. See, you see. So what is telling you that this is a bullish engulfing zone? That's why it generated a buy signal. So what is telling you? The market should rally above this range. You're in a buy stage. So even if you don't want to know what is happening below, but that's what the information is telling you. So whenever you generate a buy signal, where is the engulfing structure is trying to tell you. So from the support of that candle from which is can now easily spotted. So that is secret. Remember, you cannot just take, oh, this is the engulfing structure. No, the engulfing structure must start from the support. You see, to this, oh, for this way happened. Oh, okay, let's take another one. Now this is where it's okay, this is a support. So this is what the structure is telling us that if market should rally and close above this range, again that we're in a buy state. They say that. So look at this one again. Oh, this is the support. Okay, or if we use this one, I say okay, the market is telling us this. If you use this one, I say okay, market is telling us this. That if market should close above the structure, it's in the buy state. If you consider the bigger picture, you can say okay, market is telling us if it close above this, it's in the buy state. So if you hold this one, so you make your money. Now look at the current state again. Oh, this is telling us this. So what structure is it telling us? Oh, this is the structure it's telling us. So the whole thing is self-explanatory. It requires constant practice of this. So this is buy generation. So where is the support? Oh, this is the structure. So that means that the market should close above this structure when they buy state, and this is what market did. So that's the logic. This is 4 hours. So you see that the this in generating buy signals is something trying to tell there's a breach engulfing somewhere. Either it has formed or it is in the about to form. So it doesn't. Okay, look at here again. Look at this. So where is the fractal here? Look at here. Cannot really see support here, but if you look at here, if you take from here again to this point, see why the market failed again. You see, you look at here again. You look at here again. So where is your bullish structure? If you take from here to here, so see that this is say take from here. If you combine, so see, even if you combine to this point again, so it's okay. So until price will close above the structure, because that's what it tells you. So this is for the high, and so that means on the price will close above the structure. That's when you buy. Let's see what happens here. See what happens there in the future. So let's stop here and also recap what we did and also keep practicing. So the PSAS generations does not just come in vain. They have an information they are telling us that there's a bullish engulfing structure somewhere that they need to validate, and price closing above it will put us in a buy state. Thank you very much.